Hello traders everywhere, Adam Houston here, co-founder of MarketClub with your 1 p.m. market update for Tuesday the 8th of November. You know, tomorrow night is when we broadcast our 1-hour MarketClub TV show. This is when we take your questions and calls, so be sure to call in and watch MarketClub TV tomorrow night at 5 p.m. Eastern Standard Time. You can call in or email us with the numbers on the screen. That's 410-867-2100 extension 129, or email us at marketclubtv@ino.com. You know, it's different this time. Well, we always say that. There are so many negative reports about what's going on in the world, but the market just seems to shrug everything off like it's hunky-dory. I'm not so sure, as many of our longer-term indicators that we rely on continue to resonate in a negative manner. This is not to say they can't or won't change eventually, but rather they serve as a reminder that we're not out of the woods yet. Europe continues to be a serious financial and social problem for the world. The question has to be asked, how are these countries and the citizens of those countries going to deal with having things taken away from them? You know, human nature is human nature. And I know of no one who likes or enjoys having something taken away from them. I seriously doubt whether all these proposed austerity plans are going to be accepted with open arms by anybody. So what's a trader to do? One of the easiest ways, and these have not been easy markets, is to follow the market action. Today could be a good example of doing just that. While many of the intermediate-term trends are positive for some of these markets, they are in conflict with the longer-term trends that are still negative. Until we see those indicators in unison, we have little enthusiasm for chasing the long side of the equity index markets at the moment. Now let's go to the charts and the video and see how we can create and maintain your wealth in 2011. So don't forget to call in that number. Just leave a message and we'll try to get your question on the air. So let's go to our portfolio, and we're right here. And the first market we're looking at is the S&P 500. Has a plus 60 score. Now we know that means it's a trading range. And also the NASDAQ has a plus 60. So the equity markets aren't out of the woods yet. So let's take a look at the chart right now. As you can see, we're looking at a daily chart of the S&P 500, and if I pull this up, you'll see basically we've got a score of plus 60, and really the market is under the parabolic, meaning it's a little bit weak. We are having, it seems to be, some problems here. I think the level we're going to look at right there on the S&P 500 is if we see the market close below the 1253 and the 1250 area, possibly today, then I think we'll see this market on the defensive for the balance of the week. Very, very key day in my mind, and we want to watch that very carefully. The reason why is because this indicator, the MACD or the MACD, is getting very, very close to turning down to be negative. Now remember, our longer-term monthly trade triangle remains negative, while the intermediate term is conflicted by being positive. So that gives you that, what we talked about before, is about really there's no strong direction in terms of all of our indicators being positive, which we'd like to see in the index markets. We just don't have that at the moment. So watch the close very carefully today. Let's go to our next market, and that's going to be the this is going to be the NASDAQ. We're going to take a look at the NASDAQ. Now this is also very interesting because if we see this market today close below the 2,683 level, it's about 10 points higher right now, 8 or 9 points higher. I think that's probably going to create an outside day in terms of Japanese candlestick terms. If that happens, then this would indicate we're going to see this market roll over to the downside potentially. So also you've got your momentum's coming down, and also look at how flat the MACD is. If we see this market turn down, it'll turn the MACD lower, and we'll get some downside pressure. So I would not be surprised to see this market come back down towards the end of the week, which would be, I think, somewhat disappointing for the bulls. But we'll see what happens. We'll see how things play out. But watch the level I mentioned at was the 2,683. If we see the market close below that level today, it's definitely cause for concern in terms of being long, because that will create a negative engulfing line, or a bearish engulfing line, you may want to call it, which could be very, very negative for this market. So let's go on to our next market. The next market is going to be the metal, and that's going to be the silver metal, silver. And as I say, with the gold market being very strong today, we've just turned this to a plus 70. Still really not out of the woods yet. It hasn't taken out these highs. It just doesn't seem to have any real upward momentum at the moment, in my mind. Not to say it can't go higher, but look at this. The MACD is in a positive way. We have our parabolics, PSAR, which is parabolic stop and reverse, still positive. We are getting close to the upper end of the channel. We are overbought, but there's no enthusiasm to push this market higher. I'm not sure what the reason is, because maybe we're looking at this as an industrial metal as opposed to a precious metal. Sometimes it sort of has this Jekyll and Hyde personality. Sometimes it's precious, sometimes it's not so precious. It's just a metal. So I'm not sure. We'll have to see what happens. But generally speaking, daily and weekly positive, monthly in conflict. I think that's something to pay attention to. So let's go to the star of the show today, which has to be the gold market, which topped 1,800 for the first time since we were back in September. Trade as high today as 18, I think it was just 18 and change, 1802.73. Currently trading at 17.99. Now remember, this is spot gold, and it's traded 24 hours a day. And we have this live on MarketClub, and you can track it no matter where you are. So if you're not a MarketClub member, you may want to take advantage of the special we have, the $8.95 introductory offer to MarketClub. That's $8.95. That's right, for a full month. Check it out. It's just for new members. I think you'll really be impressed with some of the things that we have that can help you improve your trading. So again, we're at the top of the Donchian trade channel. We are overbought. We've hit our target, basically 1,800 today. So I wouldn't be surprised to see some profit taking coming into this market and see some sort of a pullback. But you're looking at a very strong trend. When we have a plus 100, it means there's a lot of energy to push this market higher. So again, you also have to remember with plus 100, we are plus 100 right here, plus 100 right here, and the market can drop. It's a very emotional market, very driven by a lot of things. But what the gold market is telling us right now is be concerned, be very concerned about what's going on financially in the world and in Europe. So let's go to the next market. The next market we're looking at is going to be the copper market. Now, this is definitely one you want to look at. And I'm going to put my telestrator on here to share what I'm thinking. Now, as you're looking at this market, you can see this line right here, the little dots right here. I'm just going to draw over the top of them. And they're right there. Now, that comes in today at 3.49. Now, as you know, we've been looking at the 3.50 level as a key level of support for this market. If we see that market taken out, the 350 level taken out, and the 349 level, I think we're going to see this market come down and be under pressure, some sort of pressure for the balance of the week. I could be wrong, but that's potentially what could happen. But I want to see the market take out the 350. So I don't want to jump here thinking it's 353, I'll sell it and I'll get a lead. No, I want to wait until it actually transpires. Now, the reason I'm saying that, two things. One, you have longer term trend negative, so that's down. You have a daily, which is down, and the only one you have up is the weekly. So you've got this conflict 55, meaning it's a trading range. I'm also going to take this off the screen because I want to show you the MACD and some of the other indicators. So let me clear this off the screen. And you'll see as I go down here, let me just clear this off here. Clear. So as we go down, you can see we're sort of beginning to flatten out here, and we could very close to turning this around on the downside. My gut feeling it's going to happen. I don't know why. I just have a feeling this is going to be a place, but I want to wait until the 350 area, 349 level before I would get short on this market. So again, that would be trading in conjunction with a longer term trend, but it's a trading range. So if you have some points made in this, you may want to take it as well. So let's watch that very, very carefully today, especially later on in the session. So as we go to the next market, that's the crude oil market. Now this is looking very interesting. And the market itself, we've gone out of the trade channel, the Donchian trade channel right here. You can see we popped out. We traded as high as 96.87 today. Certainly I think we're in an area of resistance. And we are overbought. But guess what? Our score is plus 60, meaning it's a trading range. Again, I'm going to put my telestrator on here to share this with you, because you've got a longer term, and this is count 95.79. Now it's a little bit higher than that, I understand, but the reality is that's the long term is indicating negative. You have a weekly and a daily, which is saying the trend is going higher. So you've got this normal conflict between the two, and I think that's the key thing to remember. So we could see a pullback from here. I think certainly if we close below yesterday's close, which yesterday's close was 95.41, so it's about another 70 or 80 points lower. We'd have to make new lows on the day. 95.23 was the low today. So I think if we close at or close to the lows, I think maybe that's going to be a top for this market. I think it's going to happen. So I have a feeling that this is a very important day for the markets, and I think we could see some reversals later on in the day. So let's see how that plays out. So again, let me clear the screen and go to the next market. And the next market is going to be the dollar index. Again, what we're looking at is a plus 75, a little bit of a conflict, longer term up, daily up, weekly down. So this is where we have this conflict, and again, these are going to be resolved sooner or later. I think we'll see the market resolve it possibly on the upside. So one of the things we talked about yesterday was a pennant formation. It's a little bit out of that now. I would say this is going to be a very important line to watch. We've been talking about this level here, this 77.50 level. If it goes over there, I think we're going to see this market possibly test up to these levels, 80 to 79.5. But we want to see that market come out, bust out to the top. And I can't imagine how the euro is holding on, but it certainly is. And we'll just have to wait. But you've got your parabolic down here, so the market is clearly up. And I'll clear everything off the screen and show you the other markets, so the other MACD and everything else that we're looking at. So clear that, go down. And you can see the MACD is in a positive mode. We're not quite overbought dramatically, so I think we could still see some more upside action in this market, particularly is if we close over yesterday's high around, I think we close over 77 today. We're not that far away. I think that will be a positive for this particular index. So last market's going to be the CRB index, which is the Reuters-Jeffries CRB index. And this is, I think we're going to see this market start to come back down. Now, here's the reason why. Again, we have this conflict between the longer term and the shorter term. So here's the longer term. Again, it's negative. Daily and weekly positive. So you have this plus 60 score, meaning a trading range. And the one thing I noticed today, and sometimes I like to see these and I look at them, is if you go from this day here, which is the high day, and this day right here, you basically have 9 days. If you go forward that through here to this level right here, it's 9 days. So I think potentially we could see this market do this. So I think we'll see some information that pushes this market lower. That's my guess. Certainly the 325 levels, major resistance, and it could come in the form of the crude oil market, which is a big component here, and also some of the other commodity markets. So let's see how that plays out. But hey, it's a lot of fun. We have our show tomorrow night. Don't forget that, and I hope you all have a chance to watch, because if you can't watch it tomorrow at at the allotted hour, which is 5 o'clock. We do broadcast it on demand, but hey, give us a call at 410-867-2100, extension 129. Leave a message. We'll do our very, very best to get your question on the air. If you can't do that, certainly email us, marketclubtv@ino.com, and we'll get your question on the air. We'll read it out. Jeremy Lutz, who's my director, will be reading it out so we can get your story on air. So, hey, Adam Hewison, thanks for stopping by. Every success. Let's watch those markets. There's a lot to watch today. It could be a big, big day in the equity markets, the crude oil market, and the CRB index. So let's go from there. I'll see you tomorrow at 1 o'clock and again at 5 o'clock. Adam Hewison for Market Club TV. Thanks for stopping by. Have a great trading day.